I'm thankful for you and the quiet week. I hope you had a great Thanksgiving with family and friends. I'm thankful for the opportunity to be able to share this information about the Connecticut real estate market with you and all of my clients. I'm also thankful for the quiet week we had this week. It was a great opportunity to regroup and get ready to finish the year strong in December. We made some progress over at the Branford House, mostly demolition and cleanup, but we did get the water meter installed, so we have water and we can actually turn the heat on now. That's nice. It's Dave with the Bolduc Realty Group. Welcome to my weekly real estate market update. Today's November 24th. Let's talk about some key Connecticut market stats. So active on the market, 4,382. That's down 205 from last week. We had 75 new listings over the last 24 hours. That's also about 200 lower than what we expect. So that's in line. There's nothing wrong here. Yesterday was Thanksgiving. A lot of people didn't list over the weekend or, over the last day because of the holiday. I expect that those will come on over the next week or two and will start to stabilize. We had 3,236 closings in October. That's about 1.4 months of inventory on the shelf. Still a very, very low position. Some key dates here. I'm not going to dig too deep into this separately because when we talk about the mortgage market survey, it all kind of blends together. And this is the primary mortgage market survey from Freddie Mac. There's no significant economic news over the last week, and combined with the Thanksgiving holiday, we delivered some, it was relative calm. Mortgage rates, they remain at the 2-month lows. Mortgage applications are up 3% this week. That's 3 weeks in a row that we've seen climbing applications. This is a direct result of the lower mortgage rates. It's also a clear sign that there is buyer demand pent up. There's people on the sideline because of the higher rates. And as rates come down, more people are going to jump back into the market. More buyers means more demand. There's a challenge, though. Sellers are sitting on mortgage rates that are below 4%. Everyone I spoke to this weekend, everyone was asking the same question. Why would I sell my house and go into a much higher mortgage rate? I've got 3%, I've got 2.5%, I've got 4%. Why would I change? What does this mean for the Connecticut real estate market? Well, it means that supply is going to continue to be constrained as long as mortgage rates are elevated. There will always be exceptions. There are always going to be people that need to move because of jobs, because of family, whatever the reason. But high interest rates are going to limit supply for some time to come. The next expected catalysts on mortgage rates are the PCE at the end of the month, the jobs report on December 8th, and then the Fed meeting that happens on the 12th to the 13th. I expect that mortgage rates are going to stay in this mid to low 7% range until then. Hopefully I'm wrong and they drop even further. I'd love that, but that's kind of what I think is going to happen. The FOMC members, the Fed, they agreed in their last meeting to proceed carefully. Those words are very specific, proceed carefully. The language from the meeting minutes indicate they're not planning on raising interest rates again this year, but they are reserving the right to if inflation pops up and starts going higher again unexpectedly. The recent inflation data does support the position that rates are high enough now and the effects are starting to be felt throughout the economy. The need to proceed carefully comes from two things. The first is they don't want to overcorrect and crash the economy, and they don't want to undercorrect and have inflation go crazy again. So that's where the Fed is right now. And investors, they've been on this page for a while. They don't think that the Fed is going to raise interest rates in December. They're going to keep them steady. The PCE and jobs reports come out before the Fed meets. They're going to set the stage for the meeting. Then interestingly, CPI and PPI both come out during the meeting. So the Fed is going to have some real-time information to digest as the meeting is occurring. Do you think the Fed is going to be able to deliver the fabled soft landing where they don't overcorrect and then inflation doesn't go crazy? Do you think that's possible? Comment down below. We're coming up on a month into the renovation at the Branford house, the fire damaged house that I've been talking about. Thanksgiving week was slow, was expected, but we did get the water hooked up. Here's some video to check out. Here at the fire damaged house, we just had the water authority guys come in. That's where the coal bin used to be. Got a new water meter. good as new. There should be a valve right here. We got to get one added, but good as new. Next step on the process is getting heat and getting electricity. It's a quick video. That's all I have for today. Hopefully you got some value out of it. Happy Thanksgiving, and we'll talk to you again next week.